these times, which are always inevitable and they're cyclical, this is where most people get things wrong. Things always feel bad. It never feels good when things are tanking. And yet it's so predictable and it's so just what it is.
Like, I sold a ton of stuff at the end of 2021 and my timing was like spot on. The worst of the Mag 7, probably no surprise, is Tesla for many reasons. Down 37%. Like, the Mag 7 is in the bin.
Professional economists who do this for a living and write books about this stuff are always wrong about this stuff too.
Yep.
Right?
Frickin' stop looking at them and they won't seem so volatile. Genuinely, it sounds stupid.
Complicated problems require solutions sometimes that are outside the box, right?
You're just asking for problems.
Why do human beings need to go to all these extremes, right?
This is Wall Street Wildlife. Before we get to this week's show, a short word from our sponsors.
All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account 6% or higher yield that remains locked in even if the Fed cuts rates.
What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset's moving, so you can actually understand what's driving your portfolio performance. Public is a FINRA-registered, SIPC-insured, US-based company with a customer support team that actually cares.
Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description.
For an advertising-free version of the show, check out patreon.com/Wall Street Wildlife.
Hi, and welcome to the Wall Street Wildlife Podcast with Luke and Christoph. Oh my word, the world has gone to crap. All my growth stocks are in the bin. What are we going to do? In today's episode, we're going to get into some do's and don'ts and some things we're thinking about buying and some things you should definitely not touch.
Yes, Badger, you see anything different about me today? I don't think I've ever...
Fine new hat. Howler monkey.
That's right. I thought this morning, what would be my most appropriate chimp, gorilla, bonobo, monkey hat out of my collection, and I found this beautiful, exquisite, fuzzy howler monkey hat. Howler monkeys are so cool. If you've ever seen them in Costa Rica, they'll come right up to you and
we had to like park the car up while like making out on the road in Costa Rica, howling at each other, and they woke us up like a ton of times. Yeah, they're loud as F.
Yeah, so that's kind of what the market feels like now. And public disclaimer announcement, I think these times, which are always inevitable and they're cyclical, this is where most people get things wrong. This is where most people throw their hands up in the air and say, F it, I'm out. It's all a scam. But this is why, if you listen to us, because we've been through this so many times before, we think we have pretty good perspectives on how to handle this. So
I've got a relevant quote for you from a classic investing movie that I realized I thought I'd seen and I realized I hadn't actually watched. Margin Call. I watched it yesterday on the sofa in prep for the podcast because it does feel like we're going back into like maybe recession, maybe depression, maybe like the world is falling apart. Here's a great Jeremy Irons like excerpt though. It is certainly no different today than it's ever been. 1637, 1797, 1819, 37, 57, 84, 1901, 07, 29, 1937, 1974, 1987. Jesus, didn't that F me up good. 92, 97, 2000, and whatever we want to call this. He's referring to 2008. I guess since then we had 2020. There was a mini COVID recession. And now 2025, who knows where we're going? We might be going into yet another one.
Yeah. Hey, Badger, remind me, are we allowed to cuss on our own show?
Actually, I was Googling that yesterday. So apparently, do not use the F word in the first 17 seconds. And someone,
Okay, so just hold off.
yes,
Okay, just get it past 17
yeah.
seconds.
And a good guideline was for both YouTube and Spotify, do not surprise your listeners. As long as you don't surprise your listeners, it's probably okay. You don't get like crushed by the algorithm. So yes, you can swear, but not in the first 17 seconds.
Okay, well, that's fucking great news, Badger. Uh, yes. I don't know. It's like some tension between, right, things always feel bad. It never feels good when things are tanking. And yet it's so predictable and it's so just what it is that at some point, I mean, that's such a good quote, like the professionals just know that it's coming, they expect it, and they know how to write it out. So, um, yeah, look forward to talking more details about this.
We're professionals. Like we've seen this before. We've written it out. Like arguably, but I think I've said it before, right? By luck, probably more than by judgment. Like I sold a ton of stuff at the end of 2021, and my timing was like spot on. And I did that for other reasons because I'd suddenly semi-retired and I wanted to build an income investment portfolio. I went to cash, and then that really served me well. And so I've tried to be much more deliberate this time around, and I've got to like 25% cash. I was there a couple of months ago, and I feel like I'm in a comfortable place, ready to redeploy that, but not yet because, well, why don't we take a look at the Mag 7? Because I think that's like an interesting lens into like where are we in the market. I'm just going to pop up a finchat.io, nice pretty picture of the Mag 7, because you might remember, Christoph, back in early January, our first episode of the year, you and I talked about Magnificent Seven versus small caps, and we tried to make some predictions about which way the market was going to go. And I think we were both like anti Mag 7. It felt like they were massively overvalued. Well, if you look at just those last 3 months, like start of January when we recorded that episode to today, the best of the Mag 7 is Meta. It's down 2%. The worst of the Mag 7, probably no surprise, is Tesla for many reasons, down 37%. Like the Mag 7 is in the bin. But if you zoom out and you look at this picture, like over multiple years, stuff is still overvalued. Like, okay, we've seen a correction, some stuff more than other stuff, but there's a long way to go if things really going to get ugly.
Correct. Let me pontificate a little bit live with you about my current thoughts on all this global turmoil and econ stuff. I think I've been doing a good job trying to listen to all sides of the political aisles. And at one point, I do have to admit, it is fundamentally confusing when I can't trust some basic data. I don't know if you feel the same way, but like seriously, like any podcast I listen to, even or show, like, I think of them as credible people and I've done my work selecting who I listen to and don't. But at the core, there's these disputes about is Doge, for example, are the claims they're making true? And some people say yes, it's all true and we're saving all this money, and other people are saying like no, it's a bunch of lies and they're not, and I don't know how somebody on the outside can truly verify what's what. So that I'm just bracketing that as a big problem.
Yeah.
That said, let me argue for and against myself where I just make a big old chaotic mess out of it. I would say on the side of Doge is necessary or government cutbacks necessary, we are in a debt crisis. And by our, I mean I'm talking about the U.S., right? But that's, I think, a given, a fundamental given. If something didn't happen, the U.S. was on its way to bankruptcy. Would you agree with that?
Yeah, totally. And if you want to go deeper into our thoughts on that, maybe 4 episodes ago, we went pretty deep on that topic and talked about Doge and talked about like the corruption that might be hidden inside some of that stuff. But I think we both concluded, well, certainly I concluded, it's necessary to do like a sweeping attempt at trying to clear up, establish some efficiencies, clear up some of the reckless spending, and get the US economy under control.
Right. It was, to me, to my eyes, it was a disaster just waiting to happen and was visible. And some of the world's smartest financial minds were saying the same exact thing. So I don't see how, and this isn't I'm not trying to make this a political statement, but the Democratic Party's fundamental priorities, at least over the last couple of years, they're not there to reduce the budget exactly. They're there to provide social safety nets, really important things. But when the Titanic is heading toward the iceberg, right? So that's one side. The other side is, okay, so you have Elon and his chainsaw coming in, but is that reckless? Is that completely, I mean, there's the legality of it, and is he actually doing what he's saying he's doing? And maybe the fallout is much worse than, uh, can you really just fire the U.S. government and expect things to continue functioning? And I mean, and all this stuff. Then okay, so then let's add tariffs to the equation, and this is the issue.
Yeah.
I read a bunch of brilliant minds saying that tariffs are a horrible idea and they won't work and they'll just make things worse. And then I also read a bunch of other positions saying, no, this time it is different and there's such a great imbalance in trade and whatnot. And there's going to be all these manufacturing consequences that will be good for the United States. So it's a good thing. My point here is the following: that I really don't know what the truth is. And professional economists who do this for a living and write books about this stuff are always wrong about this stuff too.
Yep.
Right? So who, as investors, like, how are we possibly, like, if you're taking a side and you're like planting a flag like that, this is the one true way, bullshit. You can't know. It's too complicated. Right? So this is a bit of a rant, but my only solution is to go back to what I try to go back to, which is systems thinking, which says the following. This is all I mean by that. When you think in terms of systems, you zoom out and you see that there are many, many variables at play that interact with one another, but it takes time for any one input to have an effect on another input that then causes a change, say, in the output. So if you think of a bathtub and faucets and knobs, right? If you turn on one knob, the water starts to rise, but it'll be a little while till it overflows, right? Makes sense?
Yep.
So I'm not arguing in this moment in favor of Doge or against it, but I am saying if anytime you make a big change to the system, it's going to take time to actually see the results. So for all the people that are kind of yelling and screaming that because the markets are falling, that the tariffs were a bad idea and all this was bad and Doge is completely wrong. Well, I don't know, but I also know it's going to take time to see. And what's in this case, like a minimum amount of time? I don't know. Like, is it going to be 6 months, 9 months, 12 months? But people, like, you can't press a button and then change the global economy like tomorrow, right? So I think a lot of this, all I'm ranting about here is like there's so much panic and so many people are just jumping to conclusions that are just way too preliminary. You know what I'm saying? How does that land with you? Like,
Yeah, no, I totally agree. I don't feel like I have a better handle than that on what's going on, and I agree that most folk don't. And anyone who's trying to set out a definitive position, it's probably political more than like grounded in science and like economic science and having like a fundamental reason for thinking why something is going to happen. This is an incredibly complex adaptive system that we're sitting in. Like the way I try to navigate that is I recognize there's this huge gray of unknown, and sometimes like the stuff sometimes you feel like you know a lot, and in less volatile times you can feel like you've got a good handle on things, and so I'll be more confident in making forecasts and adjusting my portfolio accordingly. And sometimes, like now, perhaps now more than ever so before, there is so much unknown and so little that really is known. And so I try to insulate myself from that just by de-risking my portfolio a little bit, still being like 75% invested, like enough risk on that I don't mind if things keep going up and like go to the moon, because I'm like mostly invested. But I got enough cash on the sidelines, like I'm de-risked enough with my 25% cash that if stuff does go bananas, like I can take advantage of that. And
Yeah.
that
Well,
maybe to finish that thought, sorry, like that's probably why my overriding goal right now is do not do anything. Do not even look at my portfolio, which is kind of hard to do when you got an investing podcast. I remember saying this back in 2022 with my buddy Albert. Like it's hard to go hands off, and it's hard not to look at your portfolio when like your job essentially is to talk about investing every week. But I'm trying to navigate that by, I don't know, I've got like a whole bunch of other fun projects I'm doing right now, and I'm trying to let them consume me just so I don't have time to worry about what the
you know,
hell's happening.
that should be our new shingle. That should be our new ad on Patreon. Like, come invest with us. We don't even look at our portfolios.
That's right.
We know, like, we know nothing.
But I mean, we're laughing about it, but it's totally true, and it's totally like
Right.
an incredibly helpful behavior.
Yeah.
Like if things seem volatile, freaking stop looking at them, and they won't seem so volatile. Genuinely, it sounds stupid. It sounds ridiculous, like an ostrich burying your head in the sand. Like it's not about that. It's not about ignoring what's going on. It's about just focusing on the important things, which as a kind of fundamentals based strategy investor, the important things for me are what are the companies I'm invested in? What are they actually doing? What are they reporting? Everything else is kind of noise about macro and economy and the Fed and tariffs. Like I'm aware of all that stuff. I'm trying to kind of Chinese wall it in my head as that's like entertainment, and I can't let that like nonsense and noise confuse me from the real signal, which is like, you know, how to what extent are Tesla delivery numbers actually down, which we're going to see in the next couple of days.
Right. Exactly. No, this is so important. A briefer way of saying that is ignore price.
Right.
Price
Right.
is for our purposes, and you could see this so clearly. Maybe this is overstating it a little bit, but it's arbitrary. On any one day, the price that some asset is selling for reasons that have nothing to do with anything, completely certainly out of your control as an individual investor, the price might be up or might be down, and it just has nothing to do with anything. So
Yep.
if you want to stay invested and in the game while the market's having a fit, do exactly as Badger suggested. Find the companies you want to double down on or learn more about, and spend your time on the hammock, reading some good uh, information or data, updating your thesis statements and all that. That's useful. That's smart. And eventually the price, then if you have money, then you'll know what to buy or not to buy. I want to go back, if we may, Badger, to my sort of back and forthism about not knowing who to believe, and the sort of impossibility maybe of knowing what the correct thing is and the need for time. Okay, so I think, right, if I may return the conversation back to this feeling of trying to look at things from multiple perspectives and not knowing which way is particularly correct, adding the important variable of time to the equation, which tells me I won't know for some time, so I should just stop panicking and making decisive conclusions about any policy that I see. I did come across this weekend what I thought was a fascinating clip from my boy John Stewart. He's the one guy I really think I trust more than any other in terms of politics, because one, he's a creature of the left, so that just naturally aligns more with my own way of seeing the world. but he's the one guy on the left that, at least in recent times, has had the capacity to openly critique a whole bunch of stuff that the left is doing, as opposed to, complete blinders and ideological blinders. So this was a conversation in which he was talking to another guy very much on the left also, Ezra Klein. He writes for the New York Times. And I was surprised that the conversation ended up being about Ezra Klein talking about a program under the Democrats, under the Biden administration, in which many billions of dollars were allocated to enable broadband in rural areas. Okay,
Right.
there was this program, right? And then Ezra Klein listed all the steps necessary for the program, to basically get the money, like by district or by jurisdiction. And apparently there were something like 56 applicants to get all this money. And Ezra Klein is telling Jon Stewart this. And what you end up seeing in this video, we'll link to it in the show notes, is basically as Ezra Klein describes the steps, Jon Stewart is sitting there and his eyes are getting bigger and bigger. And he starts like pulling his hair out because you can see that it's madness. The system, the governmental degree of, I guess, inefficiency for short, was just pure madness. So that out of the 56 applicants, three, three out of 56 got to the point where they were finally able to like apply one more time for the money. And so all of that is to say, like, these problems are real, and it's a disaster. And it seems like no matter which side you're looking at these things from, everything seems like a disaster.
It's natural outside of like the private sector. Like even in the private sector, like I used to work for one of the world's biggest banks. Like organizational bloat and bureaucracy, like left alone, it's the nature of like middle management to kind of grow itself and grow its power and add more rules and parameters and regulations and guidelines. And some regs are really, really important, and most of it is just complete nonsense and gets in the way of actually doing business.
So that's the interesting thing about, Elon's position. He's now such a political figure for all kinds of things that I think are problematic. But I think what I'm seeing amongst enough people is that it's like it's the because there are multiple issues here, and you have a polarizing figure. The baby throwing the baby out with the bathwater maybe might be the least worst analogy I could think of. That it seems like if you disagree with, say, many of Elon's political statements, especially about, let's say, immigration for short, right? Then you're priming yourself to also think that what he's trying to do with governmental efficiencies is immediately like evil and terrible, right? But let's step back for a second. He is one of the world's best business people ever, right? I mean, for better or worse, his strategies have built incredible things. So might it be the case that some of these tactics he's using are the right things, but they're painful and the immediate consequences are bad? And of course, the optics are bad. And him going out with a chainsaw is just rhetorically and, it's just stupid, right? Like the way he antagonizes people. But maybe there's something to it. And I guess my summary about all this is, can we just like stop reacting so out of maybe agitation or like can we just allow these processes to sort of move through? Maybe that's all I'm saying. So is this a call for a little more patience? Which wouldn't surprise me if that's all I'm trying to say.
I agree, but like there's too many. It's too political. There's too many politically influenced opinions. That's just not. It's not how things are going to play out. I found a really interesting follow, a guy called Ed Price, and I'd like to link to his YouTube channel. And he's a very smart Brit who's now an American, is a journalist, and he did a really interesting interview on CNBC or one of the news channels that I caught. And I think now he's trying to launch his independent career on YouTube. And he was talking about Doge and some other stuff, and I won't try and recap it, but essentially his view is that Elon is the fall guy. You're right, everything you said, like he is probably the best person or one of the best people in the world to try and run this. But at the same time, Trump has got him at arm's length. And if this does go to shit, no one should be surprised, least of all Elon, if he suddenly takes the fall for all the bad stuff.
Right. Politically, it's great positioning. We know for whatever you may think of Trump, he's like a political, he's like the political guy that just can't die. So he must be doing something, right? Right. He knows something about how human politics in the real world work. And sure, Elon's this fall guy. How does this help individual investors, right? Maybe that's the question we need to come back to. And I think all maybe we're saying together is it's complicated. Complicated problems require solutions sometimes that are outside the box, right? Because more of the same, you're just, kind of an idiot for doing the same thing that created the problem is going to fix it. So don't panic. Don't predict, let it set. I mean, when you have a big problem to begin with, it's going to be painful, like getting out of it. So there are no magic solutions. So maybe our energy, right, are
Totally.
better spent the virtues of stepping back, doing research, focusing on what we can control rather than coming to these snap judgments that are just, I don't know, probably.
Yeah, zoom. You're right, totally right. Like zoom out. If we go back to my margin call, Jeremy Irons quote at the start, right? He just reels through 20 major recessions most over the last 100 years, but some back to the 1600s. This has happened before, it's going to happen again. And let's now looking back at 2008, it looked like the world was falling apart, the entire financial system was coming down. There were some very serious problems. Big global institutions went down. But in the rearview mirror, with 10 years of hindsight, we've gone through another whole cycle. It's not that it's irrelevant. We learned some lessons and we've improved some regs and tightened stuff up. But the world is more robust and stronger. And all of the companies that were looking, if you weren't Lehman's, most of the companies who were looking like they were in perhaps big trouble then, most of them survived unscathed. And most of the stuff we're interested in, like big tech, has gone on to bigger and better things. If you can zoom out, take a breath, don't invest money you need in the next 5 years, all those things that we talked about just last week, like our 10 investing lessons to make you a more successful investor. And we had a little movie kind of anecdote for each one. If you follow those lessons, they're most important at times like now when things seem really scary.
Amen and hallelujah.
All right, if you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account.
Public is a FINRA-registered SIPC-insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description.
Wall Street Wildlife is brought to you by the Chit Chat Stocks podcast. My name is Ryan.
And my name is Brett.
And we're the hosts of the show.
On Chit Chat Stocks, we are constantly researching new stocks from high flyers to undiscovered small caps, diving deep into business models, debating competitive advantages, dissecting valuations, and we have a fun time while doing it.
Supercharge your investing research and start listening to the podcast today. You can follow the Chit Chat Stocks podcast on YouTube, Spotify, or Apple Podcasts. Follow the show so you never miss an episode. That is the Chit Chat Stocks podcast.
Speaking of, do you have a update on your investment to-do list?
I do. Let's share this on screen. And I shared this last week with our Patreons in our Badger and Monkey Trades channel, because we got like a extra special bit of the Patreon where we talk about usually trades we've done, but sometimes trades we're about to do. So I thought I'd share my to-do list, because this is how I navigate, like forcing myself to be diligent and not react to respond to market events. I literally, it's so dumb, it's simple, it's so simple, it seems dumb, but it works for me. I literally, if I want to do anything, I put it on my to-do list and then I take a breath. Let's have a look at some of the stuff on the to-do list, right? There's stuff that's been on here for literally 6 months plus, but I've added some things. So maybe pick out one or two of the changes in the last couple of months. I really want to rebuild my Amazon position. I do think that is becoming very, very good value right now. Perhaps based on some metrics, like the cheapest it's ever been in sort of recent last couple of years. But it doesn't feel like time to pull the trigger on that just yet. And the reason for that is, like, we don't know what tariffs are going to do. I don't want to forecast. Like in the UK, in the April, it's like the new tax year next week. National insurance and minimum wage are going up. So it's going to make it actually more expensive particularly for small and medium enterprises. But any company that has like a lot of human workers, and Amazon falls into that bucket. They have like essentially a lot of tens of thousands, hundreds of thousands of folk in the UK working for Amazon who are paid like a fairly low wage. So they're going to get impacted by those changes. I don't know what's going to happen in the US. Like Trump has talked about eliminating income tax for anyone getting paid under $150,000. Someone's got to pay that bill. If it's tariffs, it's going to be organizations that pay that bill. Amazon is like a major importer. They're going to get hit by tariffs. I don't know what it's going to do to them. So this is one that's on my to-do list. I'm just going to take a breath. I'm not in a hurry to add. I've got some Amazon in my portfolio, but I do want to add to it. Anything else on my list that kind of catches your eye and you think we could dig into usefully?
Oh, I see one that catches my eye for sure. Diversify Bitcoin into Link. Oh, I'm so biased. Goodness.
Yeah, I've got this monkey on my shoulder telling me what I'm doing. I've got maybe like about 1% of my portfolio in crypto, like fairly small in the grand scheme of things. Most of it's Bitcoin. So yeah, this monkey tells me I should own some more Chainlink. So I'm going to do that after the 6th of April, because then I can sell some of my Bitcoin and I can use my capital gains allowance. Like new tax year. So, but yeah, I plan to do that.
Okay. The only other one that catches my eye is by Anduril.
Yeah, it's been on my list for a long time. It's a defense tech startup. Palmer Luckey, the guy who essentially like reinvented VR, built the Oculus, sold it to Facebook, Meta, got fired by Zuckerberg, built a defense tech startup called Anduril that's trying to overturn the prime contractors model in the US and bring like startup thinking and more innovation to defense. So I definitely think great founder, great company, the right time to be in that stuff. I just can't find like a decent deal to buy it privately. I found with good terms, like often there's like when you buy a startup when you buy like a private investment, there's often like a fee which could be say 5 to 10%. So I'm just going to have to suck up the fee when you buy. There's also times like carry. So like if you make money, some percentage of the profit of the gains accrue to the guy who sold you the stock, like essentially like the manager of the special purpose vehicle. You can get good terms if you're willing to spend about $500,000, but that's not the kind of money I want to throw into a company like Anduril. So with my little like 5-figure investment, I'm just trying to find decent terms and I can't find them right now. So it stays on the watch list. I'm probably going to end up having to buy this one when it IPOs, if it IPOs.
Okay, right on. So maybe this is a good opportunity to switch over to the why the link BTC to-do list is interesting to me.
Cool.
Do you have anything else to finish to add to the to-do list?
No, I might pick up on one of them. I think we're going to do Safari stocks today. So one of the things on my list is a Safari stock. So I'll come back to that one in a bit.
Okay, so let's switch tacks and let's talk about blockchains again real briefly, because we had a pretty ironic, timely incident happen. So we recorded a special episode about what blockchain technology / quote unquote crypto actually is, and that went live to our Patreons on patreon.com/Wall Street Wildlife. And one of the principles of why building a network on blockchain is so important is because we know that corporate networks like Google, like YouTube, like any of the big corporations that have a platform, we know that the user has no control whatsoever. Zero in all the ways. And then what happened to us, Badger? That was it that same day after we recorded?
Literally that same day. We hadn't even posted the video to Patreon. Patreon as a platform shut us down due to a trust and safety issue. And literally, we got like a 2-paragraph email saying, you have been suspended. Your platform will be deleted in the next few days. We're both like, what the F? What's going on? With no explanation as to why. We figured out afterwards why, and it was just like a mechanics thing, because we got some money on Patreon. You were trying to withdraw like, a regular withdrawal because we got to pay our editors, and something went wrong with the transfer, with the withdrawal, and I guess like their financial crime like regs kicked in. They thought maybe the money was going to a bad place, and they literally like deleted our Patreon with no heads up.
Right. So, that incident really felt bad. I mean, it's just like it's not great, obviously, just because for obvious reasons, but I had that feeling in Monkey's tummy that was like, oh shit, like seriously, like we have zero power. Something out there turned off a switch, and then what we were left dealing with is, like writing emails to the, like automated response teams, and then somebody asked me for the same info twice, and I'm like, is this even going anywhere? And we were like in this dark labyrinth of our hands are tied, and this is just bad, right? This is why blockchain is an incredible technology that's being built. So what I want to talk about as a follow-up oh, and by the way, to all you YouTube listeners, our Patreon community is really kick-ass, and that episode on the blockchain stuff comes with a PDF mind map that I made. And so if you want to check it out, it's not available anywhere else but on patreon.com/Wall Street Wildlife. So
which is back, by the way.
Oh yeah, right. And we're back. We're back. sorry to all the regulars for, whatever clusterfuck things were going on behind the scenes. So I want to update you just a little bit because Chainlink's co-founder went to DC. They're having a big conference, and he's now hobnobbing with senators and House of Rep people, and basically people in the governing body. And this is my takeaway of he gave a 16-minute opening talk. So real brief summary. we're gonna post a link to his talk, which actually has a transcript and lots of pretty slides. So if you want the whole thing, I encourage you to listen to it, read it. But basically, what Sergey was saying is that for all the reasons we talked about, the world's global financial system will be better if it runs on blockchains. That's basically the fundamental thesis. But it needs regulation, obviously, and it needs a bunch of technical things to happen. I mean, we're talking about the world's assets, right? So this isn't a game, and this is going to take several years to play out. But one takeaway for me is that now that these conversations are being had in public, in the regulatory body, like things are going, like we're moving, right? It's no longer just theoretical developers talking about what ifs. So my takeaway is that it's just going to be better for the world, and Sergey wants the U.S. to lead the financial innovation because it is a technology, just like AI is a technology. This is a technology, and the U.S. should be in the lead. That's what he was pitching them. But in order for this to actually happen, in order for the world to move on to blockchains, he basically talked about three separate points. One, you have to have a system by which you can verify that the assets basically are what you say they are. You can't just, some hacker can't all of a sudden duplicate the fact that he has two houses and all of a sudden an extra house appears on the chain, right? So you need verification. Two, he pointed out that just like on the internet, there are multiple databases, right? We have one internet, but Google has its set of info, and Amazon has its set of info, and Tesla has its set of info, right? Just like that, a world that runs on blockchain will have thousands of blockchains, thousands, or I don't know how many, many blockchains, but they all need to be able to talk to one another. It's not the case that we're just going to have one blockchain. And that is Chainlink's one of its main products. It's called CCIP. It's the protocol that will allow all the blockchains to seamlessly work as one. And the last point that he talked about is, and I think this will be of interest to you, so to speak, as a banker or anybody that's interested in finance, is that he wants or says there needs to be, or the evolution in finance is to have something he calls the unified golden record, which means that, well, the tagline is it's a single source of truth for capital markets. So it's about combining not just who owns what asset, but it combines all the data about that asset with who owns it in one, call it, golden record. So that this basically, when you have both of these kinds of informations living in one, call it, token, this prevents things like scams and financial collapses. Because remember, like just one example, Silicon Valley Bank, right? Crashed. Why? Because the ledgers of that bank were not transparent and visible. So anybody doing business with them were basically interacting with a black box, but because they did not have the appropriate data. And, why do global crises come up in cyclical terms, right? Regular terms, because there's missing data.
Yeah, like SVB went down essentially because they hadn't like marked to market the assets on their books. So they had like fantasy valuations of the things they had, and like the numbers didn't add up. And it turned out they were like insolvent if they actually looked at the true value of like the loans and their assets. So
Right. Yeah.
that got pretty ugly quick. Yeah.
Yeah. So I just want to remind listeners that from my perspective, why I'm so in love with this particular new evolving technology is because it's actually the opposite of what makes the headlines. The headlines are all this bullshit crypto gambling schemy things. Meanwhile, these legit, call it, technologists and developers are working to solve a legit problem that has haunted humanity in its entire history, which is financial scams and basically lack of data, lack of transparency. And if we fix this, if the global system moves on chain, then I think, I don't know, I had this thought, Badger. I don't know, maybe this is too like pie in the sky, but it's like people, let's say 50 years from now, might look back at humans, the human financial system when it wasn't on blockchain, and look at it like, oh my God, you guys were doing what? You guys were like making promises that, oh yeah, we have this amount of money in our balance sheet. Trust us, right? And it'll seem, I think, like the dark ages, potentially, right? If all this works, if the technology works, if the regulatory rules are put in place and all that. So the last bit is, I think the final sales pitch of this stuff is that tokenized equities, Badger, are simply better. And quote, I'm going to read you just a brief quote. You could buy a tokenized equity or you could buy a traditional financial equity. And the tokenized equity would have one, better liquidity, more global access to capital, critical information available without costly data subscriptions, and could be acquired, held, and resold by you at a low compliance cost. So equities versus tokenized equities, the case here being made is that there's just the tokenized version of it enabled by the technology is just so much better. And so end of my spiel, but hearing that talk, I'm like, yeah, in 2 years, if this all goes well and it's appearing like it's heading in that direction, this could be a massive, massive upgrade to how we do business in the world.
Like maybe, but there's still so much nonsense to get through between now and then. And it's honestly not clear to me that is the best destination, me personally. But like even like just what this week, GameStop. Like remember we did a episode on Dumb Money, that movie about Roaring Kitty and like the GameStop craziness. Like GameStop have just apparently reinvented themselves as a crypto company now. Like they've just announced in the last few days they're going to raise $1.3 billion by issuing convertible stock, and their treasury function, they've just added like, we're going to start like collecting Bitcoin as part of our treasury function. They're going to become like, they're trying to position themselves maybe as like MicroStrategy part 2. The Hawk Tour girl has just been like let off the hook by the SEC, I think, because of her Hawk coin talk, whatever that thing was. Like there's so everything you see in the news is just like meme nonsense garbage, and like the real stuff gets buried. And I it's on my to-do list. I kind of go back to our conversation with Daniel, our Chainlink expert, like a few months ago. Like I bought that. I get that idea. I'm now going to start adding Chainlink into my own investment portfolio. I buy it that like Ethereum and Bitcoin and Solana are legit, and maybe a few other things, but it's drowned out. It's drowned out on social media by the idiocy and the clownery. So the world's somehow got to get through this phase to the real stuff.
Well, that's why I wanted to bring this up in this episode. It's what's real is you have this guy from Chainlink One who was talking to the president of the United States directly a couple of weeks ago.
But like the president himself
Right.
is like running multiple crypto scams.
No, that's true. But like in terms of power, right? I mean,
Yeah, of course. Yeah.
Or the ability to make things happen. And when you are presenting your slides to senators and members of the House and the governing body of the world's most powerful country, that's the stuff that investors need to be paying attention to. Leave all the meme coin stuff alone. Forget what GameStop is doing. The fact that it wants, I mean, just like you could easily walk by a casino and not go in and play all the slots, you could easily walk by all the crypto garbage and focus on where real value is being built. And that's all that monkey's screeching about. That's the only thing. And I'm highly encouraged by the developments, and I can't wait to see how this plays out. honestly. Like, it's kind of mind-blowing when I think about it, potentially.
Great stuff. Good. All right. So yeah, watch this space, but like, do not buy the garbage meme coin crypto stuff. Like, you're just asking for problems. I've got another topic for today, which is not really related, but it's another do not buy. Can I tell you about leveraged ETFs?
Yes, please. Sounds like something Monkey, after a couple of rum-based Negronis, might be like, talk me out of it, Badger.
So I saw on the Seven Investing Discord a few days ago one of Seven Investing's excellent stock advisory service. One of Seven Investing's original members is talking about wanting to buy the 2x Tesla ETF, the 2x Palantir ETF, the 2x Nvidia ETF, and I'm like, do not do this. Do not buy these products. So I thought it might be useful just to talk a little bit about why they might only be suitable for like intraday monkeys, not for anybody who's holding a position. Well, not even long term, but overnight, right? If you're holding a position overnight, these are not the products for you. So what are they? Tesla flips up and down. It's like a super volatile stock. We said at the top of the episode, Tesla's down like 30 something percent year to date because there's so much like chaos in the markets. If you owned 2x Tesla, let's say we bought that tomorrow morning, start of business, and we bought 2x Tesla, and it's an ETF. You just buy and sell it like any other ETF. So if you bought the underlying, i.e. the Tesla stock, and let's say it was a very volatile day and the stock went up 10% or down 10%, if you owned the 2x Tesla ETF, then instead of going up 10%, you go up 20%. Instead of going down 10%, you go down 20%. So that's like that's like the purpose of these things, to amplify what's happened. And there are even 3x, and I think there might even be like 5x ETFs on certain really niche things. They're all bad. Now, they're bad for two reasons. One is obvious and one is not so obvious. The kind of obvious one is, if you just take a volatile company, like let's sit with Tesla as our example, like if you own the underlying and it goes up by 10%, let's say $100 in Tesla stock, and it goes up by 10%, then you've got $110. And if it then goes down by 10%, you lose 10% of the $110, i.e. you lose $11. So you finish up, you went up by 10%, down by 10%, you finish up, you've lost $1. Does that make sense? You've gone from 100 to 110 to 99. If you owned the 2x Tesla, and this is all, we're just taking the sort of simple case here, then you go from $100 to $120, then you go down by 20% of 120, which is 24. So you're down to $96. So it's not like you've lost, like in the base case, you lost $1. If you own the 2x ETF, you've lost $4. That's just over like one day. And if you sequence together like day after day after day of a volatile company, well, you're going to get run to zero very quickly, just because like the downside is magnified and the downside is more impactful than like the equivalent upside. But these leveraged ETFs are bad for a more complicated, subtle reason as well. And it's because they have to do something called like an overnight reset. And so every night they reset themselves. And it's because this is really complicated, and I don't want to try and get into the real arcane detail of it. But essentially, like if you've gone up 10%, so the underlying went to $110 and the 2x ETF went to $120, well, you have to have like you have to start day two with the same amount of leverage. So that means the ETF has to go out and get more exposure, because it only had exposure to like $110 worth of stock. But in theory, it has to kind of sell to the owners of the ETF, like the investors. it has to sell at that point $240 worth of exposure. Does that make sense?
Mostly, yeah.
Yeah. So essentially, these things magnify overnight. They magnify the gains and the losses even more because they do this reset each day to get the same kind of market exposure as if they'd like doubled or halved from yesterday. Well, not doubled or halved, but if they'd gone up by whatever percentage yesterday or down by whatever percentage. And so this daily reset serves to magnify your gains or your losses even more. So in a volatile market, like these things go to zero. They go to zero even faster than you would think because they're doing this daily reset. So these are complicated financial products that could have a place, not in my portfolio, but maybe if you're doing like weird intraday stuff. But if you're going to hold a position overnight, like these are not designed for that. So do not buy these thinking, oh, Tesla's going to go up. And in the long run, if I hold it for 3 months, I can make a gain, it's going to go up. But if I hold the 2x ETF, it's going to go up even more. It ain't. It's going to volatile itself to buggery, and your portfolio is going to get eaten alive.
Right, or rather, right, that's actually quite quotable. It'll volatile itself to buggery. We have so many fun slogans for y'all. To me, it sounds like more a case of gain clarity, whether you're interested in going gambling in the casino or in which the likely outcome is zero, or whether you want to invest. And if you want to go gamble and there's a place to have a little bit of fun, then make sure you just you're labeling it gambling, you're heading into the casino, you have zero expectations for coming out with more money than when you came in with, and be satisfied with whatever outcome that is, but don't deceive yourself that you're investing.
Yeah, very good point.
Maybe if for no other reason, no, that's right, that's plenty. That's stay away.
You reminded me of something, like totally random sidebar, but you mentioned gambling. So last week, I came back from ski season a week early to attend my good buddy Jimbo's 50th birthday poker game. And it was incredible, like a great event, well organized. There were almost more bar staff and waiting staff and chefs than there were players. It was, he provided a great event. Anyway, he's just started listening to the podcast. So I do want to give a shout out to Jimbo, like happy birthday, buddy, and thanks for the invite. But he did remind me. So I got a confession. I think about a month ago, 2 months ago, I said I was using Gemini, like an LLM AI. I was using AI to enter the FA Cup fantasy football thing, and Jimbo was the organizer of that. And I declared victory. Like Gemini has won me £800. Well, it all went to shit at the weekend, and I had 2 teams remaining. I was in like a material lead, but the guy in third place, one of my friends, both of his teams beat both of my teams, and now it's all over pretty much. So I declared victory too soon.
Too soon, Badger.
Yeah. So
counted the chickens before they hatched, as they say in the farm business.
Exactly.
Stick to portfolio management, huh?
Yeah. So anyway, good luck to, I don't watch football, but good luck to Nottingham Forest, because if they go on to win it, my other buddy will be happy. Anyway, he looks like he's going to take the glory.
All right, Badge, take us home with a Safari stock.
Yeah, let's do that. We haven't done Safari stocks for a little while, so let's do that. And my one for this week is something that's on my investment to-do list. It's been on there for quite a while. So Novo Nordisk. You heard of them?
Sure.
Yeah. So
huge company.
Yeah, huge. Like I think they're Danish, like sort of pharmaceutical company. I think they're most famous for their diabetes care medications, and they're like a leader in that market. And I guess they became not like a meme stock, but they really had some significant gains over the last year or so because of Ozempic. So they, I think they have the patent. I might not be completely on the number here, but like Wegovy, I think, is one of theirs, and they're the largest provider of in the world of some of those like revolutionary weight loss drugs. So that's really driven them to new heights. Well, they are in the bin. Now they're on my watch list because they're a decent dividend investment, and I am still looking to increase my dividend portfolio. But they've been smashed recently for a number of reasons. Probably the biggest of which is there's a lot of competitors now for these weight loss drugs. There's other therapies from other manufacturers. They're still the biggest, but there's others. But also Trump tariffs. And Trump said a few days ago, about a week ago, that he was turning his eye to pharmaceuticals and there were going to be some pharma tariffs. And that has not helped the company at all because they do most of their sales in North America. So, so they're facing an uphill battle there. So, again, it's on my watch list. It's a Safari stock for me. I'm not buying it just yet. It is really on my to-do list. But I want to see how this tariff thing plays out. And when the noise turns down on that, at least investors get some clarity on what the cost of business might look like for Novo Nordisk, then I think they're well positioned to be a good investment and a solid part of my new to be built income portfolio.
Excellent. I was going to talk about a specific stock in the biotech sector, but I'm going to wait for next week's episode. But I will say, in general, that the biotech sector as a whole right now is complete stinking garbage. I mean, if you look at any chart, most charts, I don't know what the actual percentage is, but from if you take your starting point at basically 2020, 2021, the line is straight down and at a very steep slope. The especially for up and coming companies. I mean, basically, there are very few people right now willing to invest in pre-revenue companies. The venture capitalists world is dried up. I mean, there's a bunch of good companies probably getting acquired for pennies. I mean, it's called like, what's it called in crypto and in biotech, a winter, so to speak. And this winter has lasted, a winter years now. That all sounds bad and skull, but that is precisely when everybody else is running. But then everybody else like sees nothing but running away, and that's when some savvy investors start serious. I'll talk more about the stock that continues to interest me next week, but for I think you're right. Put it this way: I think you're right to looking at especially a well-established biotech company in moments like this.
When you do your research, like look into what's happening at the FDA. There's a guy I interviewed for my previous podcast years ago, a really good finance analyst who sits in the biotech pharma space called Adu Subramanian. And his newsletter, Substack, just yesterday talked about this topic. Evidently, the FDA is under quite serious attack right now from Doge, and they've had to fire all probationary employees, and they've got plans to cut another 20,000 employees. And then also, like part of their leadership team has just stood down, essentially been like asked to leave. And like it looks like a complicated space. And if you lose the FDA or if the controls change meaningfully, like that might make it much harder for like some of these, certainly like companies that are dependent on drugs in their pipeline to be successful, to like get them through any kind of regulatory authority and bring things to market.
Well, I haven't read this. I'm just taking what you're saying sort of on face value. The flip side of that seems to be, and I don't know if this is good or bad for humanity. I mean, it's probably a bit of both. But if the end game of something like deregulating the FDA, if that's the actual what the Trump administration wants, then probably what would happen is in some cases, some drugs that are good would get to would get out into the world much, much quicker. And so that would probably save lives and be good on the whole. But obviously, the counter to that is with fewer regulations, there would be some bad stuff that gets out there, and that would cause havoc. I mean, but the basic principle is regulate. Like it's not a one size fits all bucket. So, I go back to the thing I was telling you about the Jon Stewart interview. It is, man, why do human beings need to go to all these extremes, right? We either regulate everything to death and bludgeon ourselves with like red tape, or we set up these casinos where whatever, like whatever you want goes, and people are scamming each other to death. How hard is it to, like to say, yes, most regulation is good, but let's not overdo it, fellas? And so I don't know. It remains to be seen, I guess, what happens with the FDA getting slimmed down.
Certainly, though, like the long term might be better, but the immediate term is just turmoil and mess. And this is an area, like many government areas, that, like, I guess leadership suddenly feel like, oh, like, holy crap, like, who knows what the future of our organization is and what our kind of extent of our power should be? How's it going to change? It's just going to slow down decision making in the short term. So I'm kind of with you. I'm not a biotech investor. I'm going to stay away from that stuff, I think. I've still got my goddamn Coherus call options based on your due diligence, and I've lost my money on those.
Wait. Oh, quick note. There's a pretty non-zero. They're setting themselves up to be acquired. Basically, just put that on your radar. So I wouldn't at this point. I would not sell the options because
Right.
a big jump is in the cards.
For clarity, it's like my entertainment portfolio. It's like it's barely 5 figures, and it's just like the fun money of nonsense. But anyway, that particular thing, the monkey has misled me so far. Let's see. I think we've got until January 2026 for something to happen.
Well, if we're gonna parse peanuts, let me say that at one point those options were up a lot.
Oh yeah, I asked you. You said don't sell.
So somebody just didn't sell when they could have made a bunch of bananas. So don't look at monkey with those evil badger claws of yours.
Yeah.
All right.
This is what we said last week as one of our 10 lessons. Like, do your own due diligence. In this particular case, this was entertainment money. I was backing Christoph, and now I blame him. But that's exactly why you have to do your own due diligence. You can't blame other people. You only blame yourself for following the wrong monkey.
Right. You see what happens, friends? You try to help a badger out, and then all you get is blame and
yeah, you see, okay, all right, because I'll set you up with this because I was very pro Axon Enterprise, like the inventor of the taser, and like I've talked about them ad infinitum on the pod. Go listen to like a previous episode, and I think, and you said they're on your watch list, but you hadn't pulled the trigger yet.
Right.
Well, they got like a slaughtering from another John in the news this week, John Oliver, who I hadn't realized actually, like you mentioned Jon Stewart, I hadn't realized John Oliver was a Brit, specifically like a Brummie.
Yeah. He's one of you.
Not one of us.
My second favorite Brit after you. Well, no, I have another good friend.
He's awful. God, he's unlikable. Not just because he was saying bad shit about my favorite company.
That's why you don't like him. He's actually pretty great. But what he say about Axon?
It was all just bullshit. I don't know. You'd think it must be a slow news week or something. They had like a 30-minute segment I caught on YouTube today, because my buddy Albert said, "Oh, you should watch this. You have an Axon head." It was all like regurgitated garbage from like nothing was in the last 6 or 7 years. It was all really old news. So I don't know. I don't quite buy into the spirit of like all the news is good advertising, or whatever that saying is. Like, they had some pretty damning things to say about Axon, but it's historical, and it was like alarmist, and it was just trying to like play for laughs. It wasn't even particularly funny. Yeah,
I mean, it is a Right, it is a comedy show, though. Right, that's why Jon Stewart is my main guy, right? Because his comedy is actually, I think, mostly on point and talking about legit issues. But last principle, I guess, to leave you with, right? It makes sense to me that as a normal investor, meaning normal, average, I guess is what I mean by that, that gets most of their info from the news, and you don't do your own due diligence as per our 10 jungle laws, then you would have, according to you, who has done their research, you would come to the exactly wrong conclusion based on some puff piece in the mainstream media. So that's such a key principle. Maybe you could, at some point, return us to some of the points that they made, specifically on why they're so wrong and outdated and whatnot. Because Axon is a really interesting, good company that I for sure want to own at some point.
Yeah, cool. Okay, now is probably not the time to buy it. I think it's still relatively overvalued, although it took a bit of a ding in the last month or two. But yeah, we'll come back to that. Good one.
All right, so let's end our show with a reminder that our Patreon community at patreon.com/Wall Street Wildlife is back in business, and we're having conversations in the community chat, and we have a trade channel where we post our new buys. And on April 1st, we're re-upping our King of the Jungle portfolio with another $200. So let's see how long Monkey could refrain himself from spending it all at once versus Badger's obvious tried and true tactic of just doing nothing. But when he does, it's meaningful. So we hope you join us there on Patreon.
And I did buy a couple of things in the last week. We talked about it on Patreon, so I won't talk about it here. But yep, go check out on Patreon if you want to see what I added to my King of the Jungle portfolio. I do want to give a shout out to finchat.io. We only talked about it once in today's episode, and I showed that Magnificent 7 graph. It is an incredible tool. I use it. I'm probably staring at it for like an hour a day, pretty much every day, including weekends. It's my main research tool now. If you want to get some benefits and also help us out, if you go to finchat.io/wildlife, you'll get 15% off any paid plan straight away. So finchat.io/wildlife to get that benefit.
Awesome. Are you ready to become a beast of an investor?
Your journey, my friend, starts here.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.